Hello students, now I'm going to talk about the fundamental of cost and management accounting, the theoretical part of the course. First of all, let's have a look some conceptual fundamentals, which is in chapter 1. Uh, the very first thing I would like to start from is accounting. What is accounting? Accounting is an information system and can be considered as language of business as well. The overall objective of accounting information is to provide information to its various users. So uh, there are three branches of accounting. The first one is financial accounting, second one is cost accounting, and last one is management accounting. So let's have a look one by one what are the basic concept of branches of accounting. The first one is financial accounting. Concept of financial accounting. What is financial accounting? Financial accounting is the process of identifying, measuring, and communicating economic information to the users of information. So it is a branch of accounting which is primarily related to the recording, classifying, summarizing, and presenting the day-to-day transactions. Objectives of financial accounting. Objectives of financial accounting is to record the financial transactions, to disclose the result of operations, to reveal the financial status, and to supply necessary financial information. Let's have a look the limitations of financial accounting. First one is discloses the overall result only. So financial accounting discloses the overall result of a business. It fails to reveal the result of each department, process, productions, job, etc. Number two, not helpful in price fixations. Why? Financial accounting does not provide the adequate information for fixations of selling price of product, produce, or services rendered by business. So it is not able to prepare a tender or quotations. Number third, no controlling over cost. Financial accounting does not provide proper systems of controlling various elements of cost like material, labor, and other expenses. Fourth, no classifications of cost. Financial accounting does not classify cost into different categories such as direct, indirect, fixed, variable, controllable, uncontrollable, normal or abnormal, etc. Fifth, fails to offer a system of standard. Financial accounting fails to measure the efficiency of material, labors, and other source as it does not offer any system of standards. Seventh and lastly, fails to ascertain cost of production and services. Financial accounting fails to ascertain cost of product and services due to lack of cost information. So now let's have a look another branches which is cost accounting. Cost accounting is a branches of accounting that has evolved to overcome the limitations of financial accounting. It is the process of accounting for cost, which is concerned more with ascertainment, allocations, distributions, accumulations, and accounting aspects of cost. So it is an internal reporting system that aims to assist the management of planning and decisions making. Cost accounting is more concerned with short-term planning and its reporting period is much lesser than financial accounting. Uh, According to the Harold J. Weldon, cost accounting is the classification, recording, and appropriate allocations of expenditure for the determinations uh, of cost and product service, and the presentations of suitable arranged data for purpose of control and guidance of measurement. Now let's have a look the objectives and functions of cost accounting. The very first is to ascertain cost. Second, to analyze cost and loss. Third, to control cost. Fourth, to help in fixations of selling price. Fifth, to aid the management. The importance or advantage of cost accounting. It helps to control cost, provides necessary cost information, uh, ascertains the total and per unit cost of productions, introduces cost reduction programs, discloses the profitable and non-profitable activities, provides information for comparisons of cost, checks the accuracy of financial accounts, helps to investor and financial institutions, and beneficial to the worker. Let's have a look at the scope of accounting, cost classifications. This refers to the growing homogeneous items of cost into common group. Cost classification is the process of arranging the items of cost into certain categories on the basis of defined criteria. Secondly, cost recording. Uh, Third, cost allocations. Fourth, cost determinations. Fifth, cost comparisons. Sixth, cost control. Seventh, cost reporting. And lastly, cost reductions. The limitations of cost accounting. So the lack of uniformity. Cost accounting lacks the uniform procedures. It is possible that two equally competent cost accountants may arrive at different results from the same information. And secondly, conceptual diversity. There are a large number of convention estimations and flexible factors such as classification of costs into to its elements, issue material and average or standard price, appropriations of overhead expenses, arbitrary allocations of joint cost, divisions of overhead into fixed and variable cost, division of cost into normal and abnormal and controllable and uncontrollable, and adaptations of marginal and standard costs due to which it becomes difficult to have exact cost. It is costly. And fourth, ignorance of futuristic situations. Fifth, lack of double entry bookkeeping systems. Under cost accounting, double entry system is not adopted, so it does not enable to check the arithmetical accuracy of transactions and locate the errors. And lastly, developing stages. So let's have a look at the cost accountancy. According to the Chartered Institutes of Management Accountant, London, cost accountancy means the applications of costing and cost accounting principle methods and techniques to the science, art, and practice of cost control. It includes the presentations of information derived therefrom for the purpose of managerial decision making. So, cost accountancy comprise the following areas. First, cost accounting. Second, costing. Third, cost control. Fourth, cost reductions. And fifth, cost audit. Let's have a look the management accounting. The term management accounting consists of two words, management and accounting, which is used to describe the modern concept of accounting as a tools of management in contrast to the conventional accounts prepared to show the financial positions of concerns. So it is the study of managerial aspect of accounting. It shows how accounting function can be reoriented so as to fit within the framework of management activities. Let's have a look what are the definitions of various famous people say. According to T. Lewis defines, management accounting is primarily concerned with the data gathering, analysis and processing, interpreting and communicating the resulting information for use within the organization so that management can more effectively plan, make decisions and control operations. According to the American Accounting Associations, management accounting is the applications of appropriate techniques and concepts in processing historical and project economy data of an entity to assist management in establishing plans for reasonable economic objectives and in the making of rational decisions with a view to achieve the objectives. Let's have a look the objectives of management accounting. The first one is to help in formulating plans. Second, to help in the interpretations of financial information. Third, to help in controlling performance. Uh, Fourth, to help in organizing. Sixth, to help in solving business problems. Sixth, to help in coordinating operations. Seventh, to help in motivating employee. Eight, to communicate up-to-date information. Scope of management accounting. First one is financial accounting. Second is cost accounting. Third is forecasting and budgeting. Fourth is cost control techniques. Fifth, statistical data. Sixth, taxations. And last one is office services. Now let's have a look the limitations of management accounting. The very first is continuance of intuitive decision making. Management accounting is supposed to eliminate the intuitive decision making process of management and replace it with simple path of management replaced with scientific decision making. Unfortunately, much of the management is prone to take easy and simple path of intuitive decision making rather than the difficult one, but realistic scientific decision making process in the day-to-day management. Broad-based scope. The scope of management accounting is wide and broad-based, and this creates the difficulties in implementation process. And third, mainly based on accounting. Management accounting is wow, isn't it? Mainly based on accounting. Ah. Management accounting is mainly based on financial accounting and cost accounting. Therefore, the effectiveness of management accounting largely depends on the effectiveness of this accounting. Fourth, evolutionary stage. Management accounting is a new discipline and growing subjects too. It is still in infant stage and undergoing evolutionary process. Naturally, it faces the certain obstacle before achieving perfections and finality. Not an alternative to the management. Management accounting is not an alternative to the management. Uh, it just helps the management to carry out its activities. This is not an end, rather a means only. Six, cost installations. For installations of system of management accounting in business concern, elaborative organization and large number of manuals are essentials. This in turn increase the cost due to which only large scale organizations can afford to install it.